Hello everybody, welcome to GDMFX European Session Market Outlook. You're with Martin Panev, Chief Account Executive and Trading Analyst with the company, starting with a short outlook on what happened yesterday with North American markets. Basically, the Dow and the Nasdaq managed to gain some points finally, but as well, the DAX index is up with another 0.10%. The retail sales month-on-month, 0.9%, worse than expected at 0.6%, increased the likelihood of patience from the Fed for rate hike. Initial and continuing jobless claims, 15,000 better than expected and 82,000 better than expected, month-on-month, year-on-year. Retail sales excluding autos, 0.6% worse than expected. Business inventories better than expected by 0.1%. 30-year bond auction, 0.161% higher than previous. Monthly budget statement, 5 million worse than expected. Imports price index, month-on-month and year-on-year, 0.2% better than expected, and 1.4 lower than previous. Export price index, month-on-month, year-on-year, worse than expected and higher than previous. Capacity utilization for Canada came out as expected. New housing price index, month-on-month, year-on-year, same and 0.3% lower than previous. For today, we have the net change in employment for Canada, as well as the unemployment rate from Canada. Also, we have a couple of Tier 2 events, the Reuters Michigan Consumer Sentiment Index, and also the Producer Price Index month-on-month and year-on-year for the US. As well as a few Tier 3 events, which are the participation rate, the PPI excluding food and energy month-on-month, year-on-year. That will be all for the North American markets. EU markets, the DAX and the French CAC didn't move yesterday in value. The CPI data from the EURozone came pretty much as expected. The industrial production has shown some growth on a yearly basis and slight decline in the month-on-month readings. The German wholesale reports came out already this morning with slight decline year-on-year and little positiveness for the month-on-month reports. On currency movements, the euro-dollar 90 pips up yesterday, euro-pound 70 pips up, euro-Australian dollars 100 pips down, Euro-Canadian dollar 40 pips up, and Euro-JPY 100 pips up. Also with the New Zealand currency 90 pips down. Moving along to the British markets, the UK markets, starting with the FTSE 100, which opened with a gap yesterday and gained a total of almost 60 points yesterday, closed at 6,774 points. The trade balance reports came lower than previous yesterday, and the pound has suffered versus its main rivals. The biggest movers were versus the Australian and the New Zealand dollar, with over 330 pips move. In a speech delivered in Sheffield yesterday, the Bank of England Governor, Mr. Carney, warned that low inflation may become persistent due to a global deflationary pressures. Another important aspect of his speech was his view that the global economic cooldown may set in permanently and have a weakening effect on the 1.4% core inflation. The interest rate hikes will be limited and gradual over the next 3 years. The cable is 55 pips from the 1.48 support level. This is with regards to the pound dollar. From July 2013, if broken, the next support level, there will be another 510 pips away at 1.425. Moving to commodities, the S&P 500 index had 30 points range yesterday, up to 2,065. Yesterday, the natural gas held on to gains on Thursday after data showed that the U.S. natural gas supplies fell more than expected last week. Gold futures closed slightly higher yesterday, following a streak of massive losses in recent days amid mounting concerns of an interest rate hike by the Federal Reserve. The domestic oil futures fell sharply yesterday afternoon amid an unexpected decline in the US retail sales, reversing the previous gains in morning trading. The WTI crude futures experienced their biggest fall around noon before closing down for the session. The unstable day of trading came one day after inventory supply growth slowed from all-time record heights. That was all from me from today. Thank you very much for your attention. I wish you a successful trading day. Cheers.